Hey, it's Clay Trade, and this will be a video chart on ticker symbol PULM. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like you this time frame. I think does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. I did this analysis yesterday, so that's where those red and green line annotations are coming from. But after today's price action, a lot of updates need to be done. And not to state the obvious, but I will anyways. Very, very nice day for the chart. Sure, there was a pullback in the afternoon, but from the overall perspective, the bulls are still putting new highs and are working on putting in new lows, and that's how those long-term uptrends are built. First thing I'm going to do is just get rid of that line there. Sure, it still pertains, but from a presentation standpoint, and not wanting to have a million lines everywhere that can cause clutter and confusion, I want to try to keep this as clean as possible. So yeah, that line pertains. It's just not relevant anymore, so I don't want to keep it around. First update, though, that needs to be made comes from a foundational principle in charting, which states when levels of resistance are broken and closed above, you want to see them act as support. So right around $4.40 was a level of resistance, but as you can see here, when it was broken right there, that was essentially what opened up the floodgates, and the price just ran after that break. So now that would be considered an area of support. And the other thing that, this can really go either way, but when I was looking at it is for the longest time today, this point right there at $5.10 was doing a fantastic job of holding as support. You can see multiple times the bears try to press down through there, and they were doing a good job. But today, the final 30 minutes, technically speaking, the price closed at 504. So yeah, it's below there. So you could consider this a support breakdown, but I'll be honest, I'm not quite sure which way I'd want to go on it, just because it's close. It wasn't like it was gigantic volume. So this is kind of you could go either way. If you want to call that a resistance, fine, because yes, technically speaking, the price is now below it. I'm still going to consider it a level of support, but any more sort of separation, and how am I defining any more separation? If it breaks down through the low of that candle at 485, at that point, it would not be shocking at all to see the price go down there and at least, test that secondary support right there. What about areas of resistance? 2 key levels. First one is the fun one being, everybody loves to talk about, testing previous highs, breaking new highs, and that's where the 695 mark comes into play. But in many situations, as is the case here, there's usually another bridge that first needs to be crossed. And in this case, that initial bridge, for me at least, is that $6 mark. So yeah, 695, 7, whatever you want to call it, is a level of resistance. But before you start talking about that one, first got to get back up above that $6 resistance. All in all, like I said, no doubt about it, very nice day. So it'll be interesting to see how this closes out the week tomorrow. One of the most popular questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.